Hello, buddies. This is the amendment video with respect to January 26th of CA final auditing. Don't worry, not much amendments. Amendments are trivial, meaning small, shorter amendments only. Let's finish off the amendments in, say, next to 15, 16 minutes. Okay, so let's proceed. First one is regarding the professional ethics. Our chapter number 19, which is professional ethics. Ma'am, is there a major amendment? No, only two minor amendment. And these two amendments are closely related also. Now let's first see. In professional ethics, we have ESB decisions, we have clauses, we have sections, we have council guidelines, we have regulations, etc. Now, where the amendment has taken place, we should have clarity whether it is in ESB, whether it is in clauses, whether it is in sections. It is in clauses. Now, clauses, if you see, how many clauses were earlier there? There were 34 clauses were there. Am I right? 34 clauses. How many clauses? 34. 12, 2, 3, 2, 10, 4, 1. Ma'am, what is it? First schedule and second schedule. It was divided into part 1, part 2, part 3, part 4. This one, part 1, part 2, part 3, part 4, and second schedule, part 1, part 2, part 3. Now, where the change has now taken place. Part 2 of second schedule. I repeat, part 2 of second schedule, they have added one more clause. So now part 2 of second schedule, instead of 4 clauses, 5 clauses. And because of this amendment, there has been a minor change in clause 9, part 1 for change. So I hope it's clear where the change is. It is first in part 2 of second schedule and clause 9, part 1 of first schedule. Now let's dive into the clauses. What is clause 9? First, let's discuss this. What is clause 9, part 1, first schedule? In fact, there is no major changes in the clauses, just a minor word change. Now, what is clause 911? Clause 9, part 1, first schedule. If you know, we used to say 911. The key word is ascertain, meaning being an auditor of a company, you accept the appointment without ascertaining the compliance of section 139 to 141. Meaning you are an auditor of a company, you are accepting the appointment without checking whether your appointment under section 139, 140, 141 is valid. So clause 911 says, while accepting the appointment, I repeat, while accepting appointment, you have to ascertain. While accepting appointment, you have to ascertain compliance of 139 to 141 of Companies Act. Now, what is 139? Appointment of auditor. What is 140? Removal and resignation. And what is 141? Qualification, disqualification. Now, when this clause 911 will apply? Mainly, you are an auditor of a company while accepting. I repeat, while accepting, you have to ascertain. Now, the change of the wordings is this one in red. They have added any other law pertaining to appointment of auditors for the time being in force. Meaning, already in clause, they say two things. You accept clause 911. Clause 9, part 1, first schedule says that you are deemed to be guilty. A CA in practice shall be deemed to be guilty of professional misconduct if he accepts an appointment as auditor of a company, first, without ascertaining Section 225 of Old Companies Act 1956. Second, 139 to 141 of New Companies Act 2013. Now they have added any other law pertaining to the appointment of auditors for the time being. Maybe it is other law which an auditor has to see. So they have just broaden the scope of this particular clause. Say, for example, if you're the auditor of a listed company, you have to see SEBI guidelines. Hey, SEBI LODR, SEBI LODR says no. We study in chapter 7 certain points regarding SEBI LODR. So if you're an auditor of a listed company, you have to ascertain that. So to put short, clause 9(1)(1) says before you accept, before you accept the appointment as auditor of a company, you have to ascertain the old Companies Act 225 section, New Companies Act section 139 to 141, as well as any other law pertaining to the appointment. Just this wordings. So be careful if a question is asked relating to 911. So when you write the clause, add the sentence also. Which sentence? This sentence. Clear? Now, relating to this, come to part 2 of second schedule. Part 2 already had 4 clauses. Now they added one more clause. Clause 1, clause 2, clause 3, clause 4 was already there in part 2 of second schedule. Clause 1, part 2, second schedule was contravenes the act, regulation, guidelines. Clause 2, part 2, second schedule was being an employee, discloses the information. Clause 3, part 2, second schedule was giving false information. Then clause 4, part 2, second schedule was embezzles or defalcates. Now they have added clause 5, part 2, second schedule as an addition. Ma'am, what is it? See, the starting sentence of part 2 is a CA in practice, whether or, a CA, a CA, whether or not in practice, a member, whether or not in practice, a member, whether or not in practice shall be deemed to be guilty of professional misconduct if, a member, whether or not in practice, deemed to be guilty of professional misconduct if, acts as an auditor of a company in contravention of any of the provisions of Companies Act. Now, ma'am, clause 9 also says about Companies Act. The newly added clause 5, part 2, second schedule also says. Now, what's the difference? Let's put like this. Clause 9(1)(1) and, which was the existing clause, the newly added clause 5, part 2, second schedule. This has to be seen while accepting the appointment. Why? Because it says first, before accepting, you have to see. So this is before accepting appointment. This newly added clause does not say anything. So it is after accepting appointment also. After accepting. It can be subsequently also. Not only that, here they say only, in clause 9, they say only section 139 to 141. Whereas here they don't say any section, contravention of any of the provisions of Companies Act. So even section 143 duty, section 145 sign, 146 attending AGM, etc. can come. So for the exams, which clause we should write? If it is before accepting the appointment as an auditor of a company, you did not ascertain, then clause 9, part 1 first schedule. After accepting the appointment or other provisions, then it is clause 5, part 2, second schedule. So these are the two changes with respect to professional ethics, which is chapter number 19. Note, earlier we had 34 clauses, now it is 35. I hope it is clear. And these two clauses are interconnected because both talks about the Companies Act sections. Right? Oh. Now coming to the next amendment, which is with respect to NBFC audit. Very minor amendment, and one or two things in the amendment is something which we already knew. The first one, in case of NBFC MFI. What is MFI? Micro Financial Institution. Where did we learn this? See, there are different types of NBFC, ICC, NBFC, IFC, NBFC, factoring, mortgage. So, microfinance institution, we basically have heard in glide path. Those who have the notes we have written, Glide path for NBFC in net owned funds, microfinance institution. So they're saying, what is microfinance institution? The definition is not given, but they're saying once you are a microfinance institution, NBFC, which is a microfinance institution, they should meet 60% of the total asset for the microfinance loan only. So, see, there are a lot of different types of NBFC, right? For an institution to be NBFC MFI, one condition is there, which is said now. Total asset. Assume total asset is 100, which is netted off by intangible assets. So total asset netted off by intangible. Assume 100. In that, at least minimum 60% should be given for microfinance loans only. See, if they give for other purpose, then it won't be microfinance, no, logically. So what they say is, if you are to be categorized as a microfinance institution, your 60% of total asset, when you take total asset netted off by intangible. So if intangible is 10, total asset is 110, total asset you have to take 100 netted off. Total asset is 100. Out of this 100, at least minimum 60%, 60 rupees should be given for microfinance loan. Then only you will be categorized as microfinance institution. Now assume you don't meet this criteria. That too for how many quarters? 4 consecutive quarter. Quarter 1 you did not meet this criteria. Quarter 2, quarter 3, quarter 4. Then what to do? The NBFC shall approach RBI and they will give a remediation plan. Okay, RBI, we will take the remedial plan like this. You should submit a plan. If not, maybe NBFC certificate might get cancelled or RBI will take action. So to sum up, very important, since there is a numeric, might be MCQ or some descriptive question. See, to sum up, MFI, microfinance institution, to be a microfinance institution, total asset netted off by intangible, it should be at least 60%. If you don't meet the 60% of the total asset for microfinance loan, that too for 4 quarters consecutive, you should give a remediation plan to R. So that is regarding the NBFC first amendment. Second one, in case of the risk-weighted assets, where did we hear about the risk-weighted asset in NBFC? We have heard it in capital adequacy ratio. What was capital adequacy ratio? Capital adequacy ratio, capital funds, which is tier 1 capital plus tier 2 capital divided by what? Risk-weighted assets. It should be at least 15%. In that, if you remember, in class notes, we have given a list of risk-weighted assets where I said certain assets will have 0, like cash, government, TDS, etc. Then certain will have 20%, certain will have 50%, certain will have 125%, and other cases, it is 100%. So in the other cases, if you say all other cases, we said it is 100. In the other cases, they have included RU, right of use asset also they have included. Our Ind AS, etc. talks about right of use. So in other cases, ROU is included. No major change. It's just minor change. When you calculated the risk-weighted assets, there are a lot of assets which is having 0% risk. Few assets having 20%, 50%, 125%. Like for credit card, and rest we said it is 100%. In that 100% we said other assets. In other asset, ROU is included. That's it. Now going to the last one. NBFC is primarily engaged lending against gold jewelry, where we have heard this. Again, in capital adequacy, we have heard capital adequacy, which is tier 1 plus tier 2 divided by risk-weighted assets. When we calculate, it should be at least 15%. In 15% from tier 1, it should be at least 10%. But if it is a gold, huh, instead of 10% from tier 1, it should be 12%. I repeat, capital adequacy ratio, we have learned tier 1 plus tier 2 divided by risk weighted asset, it should be at least 15% now. In this 15%, at least from tier 1, how much should come? 10%. However, if it is gold lending business, instead of 10% from tier 1, 12%. Same thing they have said. It's just a clarification. Tier 1 capital, NBFCs engaged lending against gold jewelry. Lending against gold jewelry means more than 50% of financial assets gold. Such loans comprises 50% of more of their financial asset. Shall maintain minimum tier 1 12%. Okay, of their risk-weighted asset, of balance sheet, etc. So instead of 10%, if it is gold, 12%, which we already knew, no change. It's just a clarification given additionally. Same thing only. Now, on top of that, gold jewelry, they have to adhere to the provisions of deferred tax asset, deferred tax liability for computation of capital. Now, further details, etc., they have not given. Just a clarification that gold lending business, meaning those NBFCs lending against gold jewelry, they should also comply with the provision relating to DTA, DTL, deferred tax asset, deferred tax liability in computation of capital. That's it. And finally, NBFCs deal with public money, right? So there are a lot of directions, master direction, deposit directions. Now, one more new directions they have given. Once you are lending against gold jewelry, also ensure compliance with RBI lending against gold and silver collateral direction 2025. And this should be as expectedly as possible, not later than 1st April 2026. So one more directions they have given additionally, what RBI lending against gold and silver collateral, and it should be it is issued on this date and as far possible by 1st April 2026 to be full. So guys, these things are only minor change. So since it is there in our RTP for the Jan 26, you have to just note. I feel this is the most important out of the lot. To sum up the amendments, professional ethics 2 and NBFC 3, and this note is available in the free resources of my website. Link of the same is given in the description. You can download. And let me sum up. Professional ethics, there are two changes, minor changes. First, clause 9, part 1, first schedule. What is the change? Any other law pertaining to appointment of auditors for the time being. That has to be added along with the existing clause. And newly added clause, clause 5, part 2, second schedule. As an auditor of a company, if you contravene any of the company's act, auditor of a company. So that's a newly added clause. So now totally 35 clauses are there in the place of 34 clauses. Now in NBFC audit chapter, which is chapter number 14, 3 points. 1, MFI. To meet the MFI, 60% criteria is there. If you don't meet this 60% criteria of total asset, that too for 4 consecutive quarter, remediation action should be intimated to RBI. Then while you calculate capital adequacy, risk-weighted asset, in other asset include ROU, risk weight is 100%. Then NBFC lending against gold jewelry, as we already knew, from tier 1 instead of 10%, it should have at least 12%. Then they should also adhere to the DTA, deferred tax asset, deferred tax liability in computation. And they should have complied with the newly issued direction RBI lending against gold and silver collateral direction 2020. So guys, that's it. So stay positive, stay energetic. I always feel energy should come from your mind rather than body. If your mind is energetic, your body will follow. So give your maximum. Wishing you all the very best. Keep going. We will be successful.